Hey guys, this is a recent article, but it's really out of date because this says paying 160,000 interest alone over your lifetime. It's really a lot higher than that because just this mortgage one alone, before we had used the example of a $500,000 house at 7.35%. The average APR for the benchmark 30-year fixed rate mortgage is 2.78 at the time of this article was written. Um, well, I don't think that was true because this said it was on May 5th, 2023, and there are no 2% mortgages anymore. And then it says someone typical 20% down payment. Well, 20% down is not typical anymore. For a VA loan, you need just to pay the closing costs, which is typically maybe 5%, and maybe even a little less. But even for a two almost a 3% mortgage with a 20% down payment, which means you paid in cash 20% of the home's value, you still would have paid $142,000 over the course of 30 years, which is basically half the value of the house extra in payments for auto loans. The average car loan came in at 22,000. Average term was 69 and a half months with a 4%. So out of that car you're paying 22,000 for, you're basically paying 6,000 6,000 interest, between 4,500 and 6,000. And then this is a student loan, assuming 3.73. And people take out a lot more than 30,000. I mean, that doesn't even pay for 1 year, hardly in some cases. Most medical students are $1 million in debt after they get out. 7 years of college. 7 years of medical school plus 4 years of regular college. But yeah, I think this should be closer to well, if the average person makes $1 million in a lifetime and they pay 33% in interest, that's 300 and some $1,000. Not taking into account taxes and that kind of thing. But yeah, I mean it's it's a good chunk of your money that you're paying in interest, and that's why I'm so passionate about building wealth via the stock market and finding companies that are undervalued and getting a return on your money. I mean, I want to get an above average return, but for the average person, even if they get an average return, 7%, 8%, I don't think you can get 10% on the S&P anymore, but you can still probably get 5% right now. But yeah, we're being attacked on all fronts. We got inflation right now, so The gas went from $2 to $3.40. Food, you used to be able to buy a fast food meal for $10. Now it's 15 to 20. Um, Rent prices have gone up, and people are saving less because they have to spend more of their money on their rent, on their mortgage, on their cars, on the gas, on their food, and what if the things collapse? What if things get worse? I mean, it's bad now, but we gotta start building wealth and saving less than we make, and earning a return on that money, and making um, wise decisions, wise investments. Thank you.